Alrighty, so let's talk about what happened in the stock market the last few days, starting with Amazon. So, Tuesday, let's go ahead and begin with Tuesday. Okay, so this is important to note that on Tuesday you got a gap up. Um, in the pre-market, the CPI results came out and was favorable. Now, the news sparked an initial uptick in both the general market and all the top stocks, including Amazon. A lot of time, these news are not as good as what they initially appear. It's really more or less just front running by day traders, momentum traders, hedge funds. They are trying to get the weak hands who hedge short. So the dynamic of the market nowadays really about it's all about day trading and momentum traders and getting shorts to cover. So if they hijack this news, they gap it up and attempt to get the shorts to cover. And in this attempt to get the shorts to cover, they need people, institutional investors, regular investors, regular traders, 401k individuals, anyone who are not front running to get in. Um, and that getting in pushes the stock higher, which also feeds on itself and get more short covering. When that fails, oftentimes it would be a complete reversal because without buying, the shorts are gonna get strong confidence and they'll be able to successfully hijack um, uh, the opposite of the hijack one way or the other, right? The longs versus the shorts. So the shorts will be able to successfully hijack it and take it to what you see is why often you see the signature of low of days, which is the low of the day on the close, or high of day, which is the opposite. Essentially, it's the longs getting all the fear of the shorts to cover, and the inverse of that is all the shorts just pounding in and getting the longs to get to sell out and hit the stops. Right, there's stops along the way. So Tuesday initially in the morning is technical Tuesday, and why in the mornings are typically technical is because the volume is strong and you got individual hedge funds and day traders um, look making positions on the technicals. Right, here you got support of this 5 minutes, and this 5 minute line is quite important to note is that in the intraday I have been paying attention to the 5 minute as my primary trend or chart to look right on this screen where I have multiple um, right here. And I have multiple positions. I am tracking it based on the 5 minutes. I am no longer doing that. I still have that screen, but this my screen now that I'm tracking have converted to is the 15 minute. And the reason I have converted to the 15 is because of the 15-minute trend line and the fact that I don't want to get these type of traps. And I've continuously get this type of trap here is what I was talking about, right? The morning was technical, so it's technical Tuesday, and you can see the support right here. This support right here oftentimes would indicate that it's higher lows and that the stock will eventually, push through. This is an intermediate high, but it's almost got to the flat line, but you would think like, oh, it's probably gonna retest it. Well, guess what? Right here on this 5 minute is a trap, and it's only a trap if you're looking at the 5 minute and failing to see what it looks like on the 15 minutes. Here is the exact point on the 15 minutes, right? This right here on the 15 minutes, right about right here, failing. So if you look at the 15 minutes, you will see that this gap up tests the 15-minute line, and this failure is a complete failure of the 15-minute line. Okay. Um, This is a bearish condition, especially when it gets below VWAP. So this right here was a trap, and it's a trap that is set where that anyone who bought the call puts, or I mean the call options or sell the puts are going to feel this pain, and you won't be able to get out. There's no way, once it failed this line of technical line of 5 minute, there is no way you're going to be able to get it back. It's just not going to happen statistically, because um, the shorts knows it and the longs know it, and they're just going to essentially hijack it to take it one way. In this case, it's going to be a sell-off in the afternoon toward. At this point, this is another trap being laid. I mean, sometimes it does go back up because it's a successful, and that's what technical is. However, this is now in the afternoon, and so you have to anticipate that often in the afternoon it will be low of days Tuesday. So this, oh look, it went further down, a retest. So you might say, well, it's gonna go higher, but guess what? All this wiggling right here, technical Tuesday, essentially just become low of days Tuesday. So it went down to this level, and it may even break it if the condition is worse. Well, it tries to go down and break it, but it didn't. So it's ended at about 34.50, but this is still a setup for especially reversal Wednesday. Knowing reversal Wednesday, and knowing that you're right here at this point, right? Wednesday could easily be a flush down Wednesday, and it did. It flushed all the way down. So that was what happened on Wednesday, right? It was a weak opening, a week down, and then it was essentially heavy volume, and it's a flush. Now, how far down it goes, very often it will penetrate below whatever the key technical line is. And this key technical line was the 50, right? It went right past the 20, went past the 50, went pretty much to 3400, but it didn't hit 6108. So at the time, you might think that, oh, it's probably going to hit 3408. No, 61 below 3400. So you might think it's going to go down to 3380 or something like that to meet up with this Fibonacci line. That Fibonacci line, I believe, let's see where that Fibonacci line is, right here, which would be around 3388. Okay. Now it didn't meet there. Now that doesn't mean at the time that it won't get there. It's just, you have to understand the technical in that it potentially could bounce, because the 50-day moving average right here, is a technical line. So a reestablishment of the technical line on the 50 would lead to reversal Wednesday. And of course, here it is, right? This is the reattempt to get down. Had it gone a little bit further down, then it probably would have sank even lower. But the fact that it rescued right here, this first signal of a rescue, and maybe this candle weight kind of, still holding, but it's trying to fall back down. This volume here, this is the line where you say, okay, technical reversal Wednesday. You got the initial flush down. You got this VWAP, right? The way it says it failed the VWAP. And now what happening is this signal, essentially all the programs are seeing this. All the day traders, all the hedge funds, all the momentum traders, all the professional people, professional day traders with their, fancy computers and their margins, they're gonna hijack it. And guess what? They do hijack it. Hijacked it right above VWAP, pushed above VWAP. Of course, it's gonna fall right back down to it, retest it, get you to scare you out. But then it's gonna go right to the 5 minute. And of course, if you're looking at the 15 minute, um, here is reversal Wednesday. It's gonna go straight to the 15 minute. So guess what? This 5 minute, this reaction right here, all you see right here, this is a trap. This 5 minutes a trap, just like here, this 5 minutes a trap. There's some reaction right here, but that reaction essentially is a trap. So tracking the 5 minute, which I was doing on this screen, was essentially causing me to fall for these traps because I wasn't zoomed out enough. I hadn't pull my head back and kind of look at the bigger picture and see things a little bit clearly. So now tracking with the 15 allows myself to see this trend line of the 15 and prevents myself from falling for these type of traps, right? So that is why the 15 is so important, because at the time, here is this 5 minutes, you're going to say, well, it's going to go up and test the 15. Here was the 5 minute. It is going to go up and test the 15. This reaction on the 15 where it gapped up on Tuesday, right? This test is going to, at this point, it's going to try to retest it. And guess what? It did retest it and broke right through it, right? Here, probably at this point right here was where it was at the 15 right up here. And then it's just going to keep going and going. So end of day high. Essentially, it was end of day low on Tuesday, or potentially it could have been Tuesday end of day low. Then flush down Wednesday, afternoon reversal Wednesday to high of day Wednesday, all the way up. So if you get a position here on a call, this is really what the strategy is for the day traders, the hedge fund. This is essentially what makes you the most money, this strategy, this table. If you're able to get in on this table and see it and play even one hand correctly and have the discipline to hold it, have the discipline to hold it. Because what I do is I cover out too soon, either on this VWAP or on this 5 minutes, and I'm missing out on all this opportunity gains. This opportunity gains, this is, at least 5 to 6,000 on one call option. On one call option, if you do, if you do what I sometimes would do is I would sell a put and buy a call. I mean, that is an aggressive. I'm doing more risk management, but that is a little bit aggressive. But if you really want to play this table, that would be what is the correct strategy. Would be to sell one put and buy one call anywhere here, right, on this, really the signal where you see that it didn't go any further down and this bump up, especially reversal Wednesday. This is, 6,000 on the call and another 3,000 on selling the put. So that's 9,000, and that's really what a lot of traders are really focusing on nowadays. It's really high of days, the push, and of course, the opposite would be low of day, the flush, the sell-off. That's the strategy that essentially all the day traders, all the hedge funds, all the momentum traders, you see it over and over again with high option interest stocks like, Amazon, Apple, Tesla, Shopify, Moderna, Google even, yeah, what is it? Facebook, using Nvidia, you see Game, AMC, all these stocks. So essentially, what is going on is they're trying to get these type of signature, these type of behaviors to maximize their options. In this case, the call option, and in the reverse case, the put option. So understanding that strategy and really tracking the 15, it may be even better to track the 60. Unfortunately, the 60, which is right here, right? The 60 is the ace king hands. You got to be able to pay attention to the 60. However, I don't want to track the 60 because as far as intraday, right? If I have the screen based on the 60, I'm not going to be able to see enough granularity. That's why I have this secondary screen with the 5 minute to be able to see the granularity of this type of behavior where it's really bouncing off the 5 minute, and that's really bullish, right? If you're looking at just the 60, you won't be able to see this intraday. The 15 is a good way to look at it, where there's some granularity, and of course you can switch back to the 5 to see the close up, but tracking the 15 would be the best, you know, time frame to look at the technical, and also be looking at the 60, right? Because the 60 at this point, it penetrate the 60 multiple times. You see how it went down here. It went down to the 60, the gap up on Tuesday, then it's a sell off on Tuesday. Here it is again, hitting the 60. Then it broke down to the 3400s. The technical went right back up to the 60, and then broke up. And here it almost tried to retest the 60. It didn't. So at this point, you say, what is this? Well, it's triple witching Friday, right? So triple witching Friday. Let's just finish off and show you what happened today. Obviously, today it was the gap down, uh, which is really the opposite of Tuesday, right? Because the news on this one was that it was higher jobless claim, so it's a weaker economic data, and so initial push down. Essentially the reverse of what it did on Tuesday, which was the initial push up because of the better news on the CPI. This is all head fake, and of course you got the test of the 5, and here it is on the 15. Once it we established the 15 with the established the 15 right here, this was a bullish condition, right? Especially when you overlay Amazon with, if you overlay Amazon with here I got the QQQ overlay with it, you can see that Amazon, it was strong relative to the QQQ. So Amazon being strong with the relative to the QQ, it allows it to essentially tells you that the bias is up if the QQQ can gather strength. And of course, if you look at it with the other guys, like, where, let's just put Apple in here somewhere so you can see Apple's behavior. Here it is, right? Any recovery in Apple, in Google, in Tesla, in Shopify, and of course that leads to the QQQ recovering. That's going to push Amazon. So it pushed Amazon to essentially push Amazon to high of day, failure, and then close to high of day. So this became technical Thursday. At the time, it was, you would think like, oh, it's probably gonna be dead in the water, or at least it's not gonna go anywhere. But they do eventually hijack it and get it to the high. So that's really what's going on. Is that if you're looking at the technical, you will be able to see exactly what they're trying to do at this current table. Now the table will change, and it always does change. So most likely next quarter, after this triple witching, somewhere maybe in October or November, the game will completely change. There will be another game, and you won't be able to. It won't be reproducing this high of days, low of day, this type of behavior. You won't be able to capture it again because they changed the game so that you won't be able to, it'll keep you on your toes because they don't want you to be able to see it so often, where everybody go, oh, okay, here it is, this signature, this is of course high of day, so they'll ramp in and buy a whole bunch of call option and maximize out of this game. The programs are going to change, the hedge funds, they're going to mix it up around, and they're going to make it a little bit different, but it will always go back to this. Eventually, after you forget it for a while, it will go back to these type of scenario because that is how you maximize the gains. And when I say you, I'm talking about the day traders, the momentum traders. So this type of push, end of day high, and of course the flush, it's gonna happen. So most likely the next game they're gonna play after triple witching, which is this week, and earnings is coming up. I forget when earnings is coming up. Maybe it's in November or whatever. Or maybe, yeah, it should be in November. But the next game I'm seeing is probably most likely where this QQQ, if you look at the weekly, right, you're gonna say, well, look, this game has been going on for so long. Yes, it has been going for so long, and there may be that last capitulation top. Okay, that's what I'm still hoping for, that capitulation top. So it didn't, sell off. Now there's going to be recovery. Most likely, whatever happened on Friday can lead the momentum. Let's just say Friday is a sell off because triple witching Friday, anything can happen. Really, anything can happen. I just don't see triple witching Friday as really a high of day recovery all the way up here. I think either triple witching Friday would be kind of mute and then a sell off in the afternoon, or a mute and kind of like kind of a push and end up here. But it's not going to be something like boom all the way up here or a complete collapse. I don't think so. But I think whatever happened next week, it's going to show the hands of either failure to get to this top or break of this top and then a capitulation top. But somewhere in October or November, the new game to the table has to be the sell-off, right? It's gonna be one of these again. It's gonna be one of these again. It may be even worse, right? I mean, we haven't seen. I think this was the first. This all the way back to the whole pandemic rally. Yeah, this is all the way back in the whole pandemic rally where you got this capitulation top and then you got this complete sell off, right? Just these type of games, the signatures, I have to go back and look at them, but they are completely different than what we're seeing right now. Most people are not going to remember what that setup is, what that looks like, and they're just going to fail traps after traps. So I am still anticipating some type of huge correction either next month or November. Who knows? The longer they wait it out, the sooner it's gonna come. My opinion is that uh, Jeff Bezos waited 6 months to sell his shares, which he sold his shares. I think it was 3 million shares or whatever it was, 25 billion worth of value in his Amazon stocks. He sold it starting in what was it? May. So he sold it right around, let's see, let's go to May and let's see if we can find it right here, right after great earnings, right here. This right here. This was the beginning of his selling and it led to this crash. I think he's gonna do that again in November, and that may just line up with when the next earnings is. Hopefully that's what lines up with the next earnings. Somewhere in November, where Amazon is up here somewhere. Maybe it's here, maybe it's here. Who knows? Wherever it doesn't matter. It's going to get that sell off from Jeff Bezos selling his 3 million. He may even sell more because he was allocated X amount of shares every quarter and he didn't sell it, in August. So now he got a bunch load of shares that he needs to offload. He needs to offload it and it's gotta come in November is what I'm seeing. And that is where I'm hoping to profit quite a bit. And at worst case, if it doesn't happen, it's 50-50 whether it goes down or not. To be honest, right? The stock market or Amazon, whatever it is, 50-50 is going to go either up or down. However, with the added, factor of Jeff Bezos selling his shares, whether that add 25% or greater to the probability, you got more chance of it going down because of that factor of Jeff Bezos selling his shares, hopefully in November. So that is what I'm seeing right now. And hopefully, let's just say what is the market going to do tomorrow based on the technical? Well, it's triple witching Friday, so it really doesn't matter what happened tomorrow. The week right now looks like it's a bounce week. So I would say, yeah, let's just assume it's gonna be either flat, or even if it cut down a little bit, you still have it like right here. So I don't think anything tremendous is gonna happen tomorrow, but I would be careful of the afternoon. I would think the afternoon is when they're gonna hijack it. Either gonna be high of day or low of day. So it'd be something mute in the morning, or maybe it has some technical movement in the morning. There may be some news coming out on Friday morning too that may lead it up or down depending on what that news is in the pre-market. You would see in the pre-market where that news is gonna lead to a gap up or a gap down. And most likely, if that news is a gap up, if depending on how weak that news is, if you say like, that's not really good news, it probably gonna lead to a reversal, and the opposite is gonna happen. If that news is kind of bad news and it gaps down, it's probably gonna either see something like this, and then the afternoon it'll rally all the way up, because the hands right now is still what this is hijacking in the afternoon and getting this type of level to level kind of thing where it just runs one direction and push it all the way to high of day, or conversely being the low of day. So that is what I'm seeing for Friday, and hopefully next week. Let's see what happens next week, but let's look at Friday after it finishes.